Yo, what's up, everyone? My name is Dom, and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize all investments carry risk. There's no guarantee of profit. Alright, everyone, sorry, I've been gone for a couple days. I've been having a lot of camera issues, so actually I lost my mouse. So I had to get a new mouse, so I physically could not use my computer. I wasn't having camera issues again. We got that solved, and I was out of town. So now, first one I want to bring up is Macys, M, ticker symbol M. Now, I like this one because this stock has pulled back here for really no kind of reason here. So I've kind of been checking it out recently. You know, I like the consumer discretionary retail stocks here because these child tax credits are going out. I don't know if it's a tax credit or what it's about. I don't have kids, so I just know that it's about $3,000 or something. I don't know if that's every month. I think it's every month that people with kids per children are getting within a certain age range. So you want to know what they're going to do with that, in my opinion? They're going to go buy school supplies, buy back-to-school clothes, maybe get some technology, computers, calculators. So I like Macys here, and I think they have earnings coming up here. We can check it out when. I'm not sure exactly. But now if you look at these September 18 strike calls here, 36,000 contracts traded. There were some big chunky orders too as well. Open interest of about 1,300. So that's a whole lot of volume here for Macys. If you look at some of these other contracts here, the open interest is nothing like 30,000. Now, like I said, there were some chunky orders that I liked as I was, scanning for some unusual options activity. Now, I also like the chart here because we're at the 150-day moving average here, as seen from this green line here, and it looks like pre-pandemic high was about 17, and we're right at that level. It looks like we have some good support here coming across at this 17 level. If we expand it a little more, Macys consolidated here and then obviously dropped for the pandemic. But I think 17 here is going to be some good support here. I don't really see this thing going significantly lower. Maybe to the 200-day moving average makes some sense here. It looks like we might have some nice support here. But we might have to cut the loss at that point because that's a decline of about 3 points. So in the share price. Now that's a pretty significant decline for a $17 stock. Next one I want to bring up is SOFI. Now, if you take a look at some of these calls here, there was just an outrageous number of calls trading. So I'm in these August 13th. So what I did is I bought the 16th strike and I sold the 19th strike. I think we paid about $70 for a spread that can go to $300. So obviously, I really like that risk reward there. That's over a 3-to-1 payout, something that I strive for when I am doing vertical spreads. I always want to pay $1 to make $3. Or obviously paying less is better. You just want to make sure that you're not getting too wide with your spreads, because then you're going to experience more time decay. That might be a little bit unnecessary because the deltas are not really going to be in your favor. So now if you look at these August 6th calls here, 34,000 contracts traded, 17,000 contracts traded, 15,000 contracts traded. So I like to see these out-of-the-money calls being bought here. I like to see unusual volume and multiple contracts here in these short-term calls that expire this week. Now there was also some big volume in some of these August 13th ones. I decided to go with the August 13th ones because it's a little bit less risk. Now, you can see by the implied volatility here that they are a little bit more expensive, but I'm fine with that. We're doing a spread. We're cutting down on Vega. We're losing volatility premium in one option, but we're gaining volatility premium in the other option that we shorted. So, same thing with time decay. Now, I like SOFI here. I think this thing is definitely overdone on the downside here. As you can see, we're kind of making a nice swoosh here pretty much a parabolic shape here, and I think that this thing is going to go higher. I think it can at least get up to this 50-day moving average here. We'll probably see some resistance here. Now, these people are coming in and buying some of these calls here at the 17 strike. The stock is at a little under 16, so that's pretty far out of the money there. That's about $1.30 out of the money. So that's about 8%, just doing it on the calculator real quick. That's about 8% out of the money, and there was a crap ton of calls that were traded, either being bought or sold. In my opinion, most of those were being bought, but whether by retail traders or institutional investors. I like this stock here. They did a stock, they had a lockup expiration, so that's why the stock has been kind of taking a beating, but I really like this stock here. I own the stock, and I got into the options today. So now this thing is down from about 25 down to 15. I think there's some good money to be made in SOFI, in my opinion. So, thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep the subscribing up. Make sure to share this video with somebody who's trying to learn how to trade. Make sure you subscribe to my channel. If you enjoy the content, make sure you leave a comment down below. If you've got any questions, make sure to do all that. And we'll see you in the next one.